Yo, what's good, boys? Come with me to do my first market recap of the New York Open on the 10th of November. But firstly, follow all the links down in the bio and stick around for some more trading game, and then we get straight into it. Alright, so today we're going to go through and do a market recap from last night's New York Open. First things first, I've marked out the market open with this vertical line and then hourly highs and lows with these horizontal lines on both indexes. As you can see, first we got a massive pump up high, taking out these hourly highs. From there, this is my strategy, wait for price to hit key level, which has happened. It's come up and swept past this key level. From there we scale down to the 5 minute time frame and wait for a confirmation, which is either a break of structure, inverse fair value gap, or an SMT. So from there I was looking, we could see two fair value gaps form on there, and then one right there. So I was looking at this one mainly to get inversed, which this candle right here was looking nice to inverse that. However, it came up and closed very bullish. So I'm still looking for a break of structure, inverse fair value gap, or SMT at this point. We do end up getting an SMT with these highs right here, where Nasdaq went up and pushed above it, and then over here on ES, these highs and ES didn't quite push above it just yet. So that kept me interested for a bit there, which an SMT in this situation is a good confluence to go short, quite a strong one. However, nothing happened from that, so we couldn't scale down. No fair value gaps, order blocks, break blocks, or equilibrium was hit or formed. And then eventually the S&T got invalidated because ES came up and swept those highs. So I'm still at this point looking for a break of structure, inverse fair value gap, or an SMT, another lower time frame SMT, 5 minute one possibly. We end up getting a break of structure on both indexes, which happens here, where this is a 5 minute low, move down, move up. So that's our 5 minute low there, and this candle came down and broke below it, causing the break of structure to the downside. Same over here on ES, move down, move up, so your low is right here, and this candle here is closed below it nicely. So at this point we can scale down to the 5 minute and wait for a continuation confluence, which is either a fair value gap, order block, breaker block, or equilibrium. The main two I look for is a fair value gap and equilibrium. As you can see here on Nasdaq, there were no fair value gaps formed at all. However, over on ES, we had a nice fair value gap form from here to here, right there. However, there's no retrace back into it on ES, and it just fully ran without us. When we go down to the 1 minute, I'll go back. You'll be able to see the 6 or 7 candles are just really choppy, wicky candles, which I did not like the look of at all. Where are we? Right here on Nasdaq. So the 1, 2, 3, 4, 5, 6. These 6 candles here, they just look horrible to me. And there was no fair value gaps on the 1 minute even, which is just horrible. And then that happened, we had an up candle, and then it just dumped straight to these hourly lows that we were targeting. Sorry, not those ones. I'll get rid of that because that was hourly highs. So it did end up dumping straight to these hourly lows that we were targeting. I was on call with my mate, and I told him that if we do get an entry opportunity up here, we target these hourly lows and have our stops behind these highs up here. However, the market didn't give us an opportunity to enter, which is fine, because I'd rather predict where the market is going to go correctly and not take a trade than just enter off one confluence and it come and stop us out and then look back and think, why did I do that? That's stupid of me to enter off one confluence rather than waiting for all three of them to get hit. So I was explaining that to him and told him I was happy with this happening. And then what else happened? It came down, swept these lows. We went to bed about 2 a.m. my time in Australia, because we both had to wake up for work quite early in the morning. However, we had a great trade opportunity form around 3 a.m, which I'll run you guys through. Let me get rid of this quickly. Cool. So we're on the 5-minute time frame. It's come down, swept these hourly lows on NASDAQ and swept these hourly lows on ES nicely. From there, what do? So we wait for the price to hit key level. That's happened on both indexes. Then we scale to the 5-minute time frame and wait for a confirmation, break of structure, inverse fair value gap, or S&T. We see right here, there's a 5-minute high right here, and move up and then move down, so the high's right there. A nice candle comes up and breaks above that very nicely on both indexes. Sorry, I can't speak. Same right here, move up, move down. This candle breaks above it very nicely. From there we mark out our fair value gaps, because that's the main sort of continuation confluence I use. And you'll find I tend to lean towards NASDAQ to take most of my trades on. I very rarely take trades on ES, because I've just figured out over the years NASDAQ moves a lot more and a lot cleaner for what I do. So we have those same fair value gaps on ES, but I won't mark it out. I'll just show you on NQ. So we get that break of structure there, and then wait for a 5-minute continuation, which is your fair value gap or equilibrium are my main ones. Just by eyeing it out, we most likely get both here. So equilibrium, you take it from the 5-minute low up to the 5-minute high. Yep, so you get equilibrium hit as well, which is quite ideal, as you're getting 2 in 1 for the continuation confluence. I'll just go and put this on all charts so I can show in the 1 minute. Alright, so you would mark these out, blah blah blah, fair value gap. We would like it to come into the furthest fair value gap. That shows you that it's a lot stronger, because you're getting the prices come into a more discounted price range. However, once price entered this fair value gap on the 5-minute, I would scale down to the 1-minute time frame. Where are we? Here we are. Yep, so once price came into this fair value gap, I go to the 1 minute, and then from there I'm looking for a break of structure or an inverse fair value gap. And then we come down, fully fill this fair value gap, and then we even go down into this more discounted fair value gap, which is great for this trade. Come into it, push out of it nicely, get the break of structure on the 1 minute here. So you would enter right here on this candle. You would put your stop loss behind this fair value gap here, and then target these hourly highs up here. For that, that's about a 1 to 3 risk to reward, which is a great trade. And then as you can see throughout the night, it goes up and smashes through that hourly high quite nicely. And then similar thing happens on ES. On the 5-minute fair value gap, it didn't quite go into the second one, but it did go into this first one nicely, we would have definitely got a break of structure. I'll go back on the 1 minute. Bear with me for a second. Where are we? Here we are. Yeah. Hold on one sec, let me mark it out. Oh yeah, we're up here, sorry. Yeah, exactly. Basically the same time. Come down to the fair value gap, push out nicely, move up, move down. There's your 1 minute high, we break above it, which is your break of structure. You would enter right here on this candle, stops behind here or behind the second fair value gap down here. And then you would target these hourly highs, and then they get hit quite nicely, as they did on NASDAQ. So there we go, that's your market recap, because I didn't take a trade for the New York Open on the 10th of November.